If you go back and look at the prior bull markets of the last 50 years in gold, silver tags along, but quite often during a lot of that bull market, silver flip-flops around. But it's late in those bull trends that silver goes below.
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
So let's dive straight into it with Micheal Oliver and his take on the whole silver and gold situation, making it as clear as possible. Oliver, a sharp mind behind momentum structural analysis, sat down for a chat with Elijah from Liberty and Finance, and man, did they cover a lot. Oliver's the guy who looks at the market with a different lens, focusing on momentum rather than just the price tags you see flashing on screens. He pointed out that while gold has been hogging the limelight, reaching all-time highs and such, silver and even gold miners have been kind of snoozing in the background. But here's where it gets interesting. According to Oliver, this sleepy time for silver and the miners might just be about to end. He's not just throwing predictions out there. He's got this whole momentum analysis thing that looks at the long-term trends, and it's signaling a wake-up call for silver and the miners relative to gold. What's driving gold to these highs, and why aren't silver and the miners joining the party yet? Oliver suggests it's all about timing. Historically, silver and the miners tend to lag behind gold in bull trends, but catch up in a big way later on. Now for the juicy part. Oliver mentions that if we close out the month on a high or kick off the next month strong, it'll trigger some annual momentum measurements. Fancy term, right? Basically, it means the long-term trend metrics are saying, hey, the party's starting, and you're about to see some action in silver and the miners. He's hinting at a big shift, folks. While everyone's eyes are on gold, the smart moves are lining up in silver's corner, suggesting those who are paying attention might just hit a jackpot. And it's not just about making a quick buck. Oliver's view reinforces silver as more than a mere investment. It's a store of wealth, a kind of wealth that stands strong when traditional currencies like the dollar start to wobble.
Well, I'm not sure why they have to underperform, but historically, you go back 50 years and look at the various bull trends in gold and coincident bull trends in silver and the miners, they quite often will lag. They'll go along with the gold bull, but they'll be weaker until late in the bull trend. For instance, the last two bull trends in gold and silver, silver accelerated massively, especially in the last year of the bull market. Now, you remember, this bull market in gold is not new. It's been underway since a low in 2015, so it's a lot of years, and we've only doubled plus. And most of the gold bull markets were eightfold moves. And we've got events around us now that are horrific in terms of potential dynamics of certain markets going down big. I think the stock market is a trap. I think the teasing new highs that we've seen above the highs of 2 years ago, which so far has only been marginal, by the way. S&P is like 5% above those highs. It took it 2 years to get back up there. We don't trust it, okay? But I think what drives gold is not so much the day-to-day headlines and things that people would like to link to gold movement. You're like, oh, this data came out and therefore gold went up. Gold has been around for 3,000 years. Okay, S&P has been around since 1950s. The Federal Reserve has been around for a century. So they're baby markets compared to gold. Okay, and I think what gold sees coming is what we see technically, and that is a lot of markets where a lot of assets have been committed and hopes based upon and inflated by the Fed over the past dozen years plus through cheap interest rates and money flow. When those break, it's going to be painful. And painful in areas of the economy that the Fed cannot put up with. In other words, cannot allow. They like to break commodities, they say, although commodities, we'll get to that in a minute. What they're going to break and our assessment is they're going to break the stock market and some other related markets. Real estate's already in trouble and so forth. But when it breaks, remember 2008 and 9. Remember the in-the-street pain that people felt, even if they weren't in the stock market. They got laid off, et cetera, all kinds of hurt and doubt. And when that happens, panic sets in. And I think the stock market is in a teasing last mode here in terms of its upside probing. And when it fails, it's going to surprise people and that's when you'll start to see those data points that everybody likes to point to suddenly change. They won't change ahead of the stock market. They'll change after the stock market. That's usually the way it occurs. And that's when the Fed, the other central banks, will have to revert back to what they do best. And they've already said, we're going to cut rates 3 times this year. Okay, just a matter of when. Why did they say that? What concerns them? One thing that concerned them is their bond market crashed last fall. That concerned them greatly. So anyway, gold sees this, and it knows ultimately, no matter what the Fed said for the last year or so, that's going to go by the way. And the central banks are going to go back to liquidity, easier rates, et cetera, meaning what they do best, which means inflationary policies. And that's why gold is pushing it.
In the mix of it all, Oliver points out an interesting twist about the stock market's relationship with precious metals, especially gold, and by extension, silver. He's observing the big picture, saying the stock market's got some weak knees and might just take a tumble soon. Now here's where silver comes into play in a big way. According to Oliver, when the stock market wobbles, that's when precious metals really start to shine. He's not just speculating, he's backed by his momentum analysis, which shows specific levels in the stock market that, if breached, could lead to a significant drop. And guess what happens when stocks drop? People start looking for safe havens, and that's gold and silver's cue to step into the spotlight. What's even more intriguing is Oliver's insight into the Federal Reserve's moves. He mentions the Fed's hint at cutting rates 3 times this year. Why does this matter? Because lower interest rates usually mean a weaker dollar, and when the dollar weakens, precious metals like silver get a boost. This cycle, according to Oliver, is a signal that silver's sleepy days are numbered, and we might just be at the cusp of a significant rally. Moreover, Oliver drops a hint about the bigger players in the market, like hedge funds and large asset managers, starting to pivot towards precious metals, recognizing their undervalued status and potential for massive gains. It's like a domino effect. When the big money starts moving towards silver, it won't be long before its price starts reflecting this increased attention and demand. Oliver's perspective gives us a clue into the momentum building behind silver. He's effectively saying, look beyond the immediate. It's the underlying movements and shifts in the larger financial landscape that signal where the real opportunities lie. With the stock market on shaky ground and the Fed's policies potentially inflating the value of precious metals, silver is poised to break out from gold's shadow and make a mark of its own. This isn't just about riding out the economic
gold will
storms.
already be ahead of the
It's
game.
about recognizing silver as a
And
foundational wealth
we're at certain
that could
levels
stand the
right
test
now
of
on silver
economic
and the
upheavals.
miners as well that will cause them to engage in a more dramatic manner. I mean, literally, the price is up to a level that will break annual momentum through a trigger level. Okay. And at that point, I think they'll suddenly get a jolt and join gold. But already we've seen some large asset managers, and I don't mean gold bugs, but just general large hedge fund and other fund managers shift into the miners, which I find very interesting. Jeff, was it Stanley Druckenmiller, I think it was, like a month ago, announced he was dumping, maybe it was less than a month ago, dumping some big large tech stocks and going into Newmont and Barrick Gold, 2 of the big blue chip gold miners. And you got to realize this sector, and there's been some other hedge fund managers that have done the same. So they're starting to move some of their capital over into a sector that they view as both vastly undervalued and also ultimately linked to gold. And they, I think, see what we see as the potential dynamics here. And rather than wait for the event, they're starting to move some assets over. But the fact is, though, the gold and silver mining sector is a tiny little sector. It won't take much capital to boost it. I use this idea of the wet bar of soap being grabbed by people, it squirts up. And that's basically what we've got with the miners right now, I think, is a vastly oversold market situation, undervalued by any metrics, undervalued in relation to gold, undervalued in relation to the historical relationship to the S&P, et cetera. And when the money starts to get doubtful to the stock market, remember, some of these fund managers that are in the stock market doubt it, but they've got to be in it because they're competing with peers who are in it. And if they're not in it and catching the profits, then, they lose client base. So they're in it, but they're doubters. And it won't take much.
Peeling another layer off Michael Oliver's insights reveals a deeper dive into the interplay between gold, silver, and the miners.
Assets into
Oliver hints
categories
at an
they
impending
deem to
alignment
be
in the momentum between these
alternatives.
precious metals,
And I think the gold miners
particularly
are one of those
emphasizing the
prime.
unique position of silver. He brings into perspective that historical lag silver and miners have had compared to gold and bull markets, but this time it's different. The setup, according to Oliver's momentum analysis, suggests that silver is on the brink of a significant breakout. This is where the conversation gets particularly interesting for anyone eyeing silver. Oliver points to specific annual momentum measurements for silver that are teetering on the edge of activating a major bullish trend. It's like a sleeping giant that's about to wake up. And when it does, the momentum it carries could see it outpacing gold, not just catching up. This isn't about a short-term spike. It's signaling a potential long-term trend shift where silver could emerge as the more profitable play over gold. But why now? Oliver lays out a scenario where the broader market uncertainties, highlighted by potential stock market corrections in ships and Federal Reserve policies, create a perfect storm for silver. It's not just about investors flocking to safe havens. It's about recognizing silver's undervalued position and its historical role as a store of value. This combination of factors could see a rush towards silver, not just for its safety, but for its potential to offer substantial returns. In this unfolding narrative, Oliver's insights suggest that those who are astute enough to read the signs and position themselves in silver now, leveraging its current undervalued status, could see significant gains. This potential shift isn't merely about market dynamics. It's rooted in a fundamental reassessment of silver's role in the financial ecosystem. As the market starts to recalibrate its value, silver stands to be reevaluated not just as a secondary option to gold, but as a primary investment choice with the potential to deliver returns that could outshine gold itself. Oliver's analysis serves as a beacon for savvy investors, signaling that now is the time to reconsider silver's role in their portfolios. This isn't about jumping on a bandwagon. It's about understanding the undercurrents that drive market shifts and recognizing the long-term potential of silver as it starts to reclaim its status not just as a precious metal, but as a cornerstone of wealth preservation and growth in uncertain times.
Personal assessment is that I'm going to emphasize silver positions, using SLV, for example, as an ETF, or the Sprott Silver Trust, or the miners, such ETFs as GDX. Also, there's the silver mining ETF, SIL, which only contains silver miners. They both look technically like they're about to engage in a way that will get them back to their highs, the highs of 2020. Remember, for GDX, we're trading 31 plus right now. That high was 45. That's a 50% move just to get there. And I think that could happen fairly quickly if certain numbers are engaged, and we have them in our report, certain trigger levels are hit. And at that point, just getting back to its 2020 price high, even though gold is well above that high, will be a more percent move for the miners than will be what gold does in the coming, let's say, 6 months. So I think there's a catch up there. And I personally, what I'm doing is I'm focused more on the miners. Yes, gold is the mama. You got to watch the mama, but the mama's looking good. And I would at this point think that the laggards, silver, and the miners are about to snap and catch up. There's certain trigger levels that
Diving deeper into the narrative of silver's impending ascent,
when we get
Michael Oliver's analysis sheds light on the underlying reasons gold has historically outperformed its 10-year counterpart, and why the tides are about to turn. Oliver brings to the table a blend of technical analysis and market psychology, suggesting that while gold has been the go-to during times of uncertainty, silver is about to take its turn in the spotlight, catalyzed by a series of market events and shifts in investor mindset. Oliver articulates that traditionally silver and the miners lag in the early stages of a precious metals bull market because investors first flock to gold, the mama of safe havens. However, as the gold market starts to mature in its cycle, the spotlight begins to shift towards silver, which often offers greater volatility and therefore the potential for higher returns. This pivot is not random, but is based on Oliver's meticulous momentum analysis, which identifies key levels and trends that signal when silver is poised to break out. The context Oliver provides is critical. He highlights that the economic and financial landscape is shifting under our feet. With stock markets showing signs of strain and the Federal Reserve hinting at policy changes that could devalue the dollar, the stage is set for silver to shine. In such a scenario, silver's appeal isn't just as a safe haven, but as an investment with explosive upside potential, driven by its industrial demand on top of its value as a precious metal. Moreover, Oliver points to a growing awareness among investors, including large asset managers and hedge funds, about silver's undervalued status and its potential for significant price movements. This isn't about a short-term speculative play. It's a reassessment of silver's fundamental value and its role in a diversified investment portfolio. As more investors start to pivot towards silver, drawn by its potential for outsized gains, we could see a rapid re-rating of its price, propelled by both investment and industrial demand. This step in the narrative is about understanding the catalysts that could trigger this shift towards silver. Oliver suggests that a combination of technical factors identified through momentum analysis and macroeconomic shifts could act as the spark. These include further weakening of the dollar, increased industrial demand for silver in high-tech applications, and a broader search for yield and safety among investors disillusioned with traditional stock markets. In essence, Oliver's insights hint at a paradigm shift where silver could emerge not just as a secondary option to gold, but as a leading player in its own right. For investors willing to look beyond conventional wisdom and understand the momentum trends that Oliver highlights, there could be a unique opportunity to capitalize on silver's moment in the sun. This step underscores the importance of not just following the herd, but understanding the deeper market dynamics at play, positioning silver as a compelling investment for those looking to navigate the complexities of today's financial markets.
Gold is behaving. It's the leader of the pack, the mama market. Silver and the miners still lag, but I think that's about to change. And I say that technically. In other words, we measure the relationship between silver and gold in terms of the momentum of the spread and also the miners versus gold. And we all know, everybody knows who's in that market, that the miners have gone down for the last several years. GDX, for example, had a peak trade back in 2020 at $45. Right now it's trading at 31. Okay, and that's a rally. Okay, so while gold's well above the highs of the last few years, the miners are still well below. And I think that's about to change, especially if we close the month out near today's highs or close next month out at these levels. We've got some annual momentum measurements of these markets, meaning long-term trend metrics. They're about to engage in a way that says, okay, sleepy time is over. And I think that will wake up silver and the miners relative to gold.
As we journey further into the intricate world of precious metals, guided by Micheal Oliver's insights, we encounter the nuanced discussion around the speculative and investment behaviors that drive the markets for gold, silver, and the mining sector. Oliver, through his momentum analysis, reveals an impending shift that could see silver not just catching up to gold, but potentially surpassing it in terms of investment returns. This part of the narrative is crucial for understanding the broader economic indicators and investor sentiment that could fuel silver's rise. Oliver delves into the psychological aspects of market investments, pointing out that while gold has traditionally been seen as the go-to asset in times of uncertainty, the current market dynamics are setting the stage for silver to emerge as a formidable contender. He emphasizes that silver's smaller market size compared to gold means it could respond more dramatically to inflows of capital, leading to potentially explosive growth in its value. This is a key point for investors to consider, as it suggests that even modest increases in interest and investment in silver could result in significant price movements. Furthermore, Oliver's analysis sheds light on the cyclical nature of investments in the precious metals sector. He suggests that as gold's price ascent begins to plateau, investors looking for growth opportunities will naturally turn their attention to silver, which at this juncture appears undervalued and ripe for a rally. This cyclical shift is not merely speculative, but is grounded in historical patterns of investment behavior within the precious metals market. An important factor in this scenario is the role of industrial demand for silver, which adds a layer of complexity to its investment profile. Unlike gold, which is primarily a monetary and investment metal, silver has significant industrial applications, from electronics to renewable energy technologies. Oliver hints at the potential for increased industrial demand to act as a catalyst for silver's price movement, particularly as global economies continue to focus on green technologies and sustainability. This dual demand, both as an investment and industrial commodity, positions silver uniquely, offering a compelling narrative for its potential outperformance. Investors, guided by Oliver's momentum analysis, are encouraged to look beyond traditional market indicators and consider the broader economic trends that could impact silver's demand and, consequently, its price. This includes paying attention to technological advancements, shifts towards renewable energy, and the global economic recovery post-pandemic, all of which could significantly influence silver's market dynamics. Step 5 in this unfolding story underscores the importance of a multifaceted approach to investing in precious metals. It's not just about hedging against inflation or seeking safety amid economic uncertainty. It's also about understanding the broader trends that drive demand and recognizing the potential for significant returns. For those tuned into Oliver's insights and willing to explore the less trodden paths within the precious metals sector, silver presents an intriguing and potentially lucrative investment opportunity, marked by its historical significance, industrial relevance, and emerging momentum trends.
Except to say the banks aren't back to the 2022 highs. Okay, so you look at the stock market and various components of the stock market, and small caps and medium caps aren't, and banks aren't, and there's a lot of sectors that aren't back to the 2022 highs, and therefore the stock market's been led by we all know a handful of stocks. Everybody knows that now, but they seem to think it's going to last forever. Okay, we doubt it, but. As far as the vulnerability in the banks, I think the vulnerability is going to be pretty broad this time. And I would also be looking for example, right now, the XLF, which is the broader financial ETF, includes some banks, has just made a marginally higher high than it made a couple years ago by decimals. It's made a new high. So no doubt people are going to cheer that. It is in the same position as the S&P. It can't sneeze. If it does, I'm going to blow a floor out on its monthly momentum that will suddenly yank it from its, quote, new high back down into some depths. So I'd be looking more broadly than the banks right now. I know there's a lot of attention focused on that. But quite often when markets break, it's things other than the things that are being watched that cause the upset. Why? Because they surprise. Right now, everybody, they've been hearing about banks for over a year now. So there's no surprise element there. So I'd be looking elsewhere, like the broader financials. And there's other subsectors we're watching as well that have extreme technical vulnerability. And meaning they could suddenly shift from being good-looking sectors to be into vastly underperforming sectors.
In this segment of our exploration into Micheal Oliver's perspectives on silver, we delve into the specifics of how and why the momentum for silver is building towards a significant breakout. Oliver's analysis suggests that a confluence of technical, economic, and geopolitical factors are aligning in a way that could not only boost silver's investment appeal, but also highlight its intrinsic value as both an industrial and precious metal. Oliver points out that one of the key drivers behind silver's potential surge is the technical momentum indicators he's observed. These indicators are not just random blips on the radar. They represent a deeper, underlying momentum that has been building over time. He suggests that these technical signals are nearing a critical threshold, one that historically precedes significant market movements. For investors, understanding these signals could be the difference between catching a major wave or missing out. Economically, Oliver ties the potential rise in silver to the broader themes of inflationary pressures and shifts in monetary policy. With central banks around the world, particularly the Federal Reserve, indicating a softer stance on interest rates and continuing with liquidity-boosting measures, the stage is set for precious metals to thrive. Silver, with its dual role as both an industrial and monetary asset, stands to benefit doubly from these conditions. As inflation erodes the purchasing power of fiat currencies, investors traditionally turn to precious metals as a store of value. Silver, being more affordable than gold, could attract significant interest from both individual and institutional investors looking to hedge against inflation. On the geopolitical front, Oliver hints at the growing tensions and uncertainties that pervade the global landscape. From trade wars to geopolitical conflicts, these factors contribute to a sense of unease that traditionally drives investors towards safe haven assets. Silver, in this context, is not just seen as a safe haven, but as a pragmatic investment in uncertain times. Its industrial uses, particularly in sectors like renewable energy and electronics, also mean that its demand is partly insulated from the fluctuations of the financial markets. Furthermore, Oliver underscores the importance of the gold-silver ratio, a metric that investors use to gauge the relative value of these metals. With the ratio historically high, indicating that silver is undervalued compared to gold, there's a strong case for a reversion to the mean. Such a correction would signify a significant upside for silver, especially if gold continues its upward trajectory. Investors, drawing on Oliver's analysis, are presented with a compelling case for silver. It's not merely about jumping on a bandwagon, but recognizing the convergence of factors that make silver an attractive proposition. The combination of technical momentum, economic conditions favoring precious metals, geopolitical uncertainties, and the historical context of the gold-silver ratio creates a potent mix that could propel silver to new heights.
Yes, and also the T-bond market, which has been, over time, this is a true statement about its relation to gold. There's times when T-bonds move with gold, or when their price goes up, yield goes down, gold's going up. There's times when the opposite's the case. So it's not always the case that it's totally in sync with gold. But right now it's slightly lagged to gold, actually. We're watching both long-term, the 30-year T-bond futures, and TLT, the ETF of long-term U.S. government bonds. And they're both very ripe for upside breakouts that will continue. The surge that we had from that October low last year was vertical. We expected the crash and we expected the vertical low. But since December, they've backed off modestly, not terrifically, but they're not giving up the gains from that October low. That shocked the Fed, that collapse. But the pullback we've seen in T-bonds lately, meaning higher yields, we think is about to be arrested, and they're about to go through the price levels we saw back in December, meaning rates go down again. I think that will be also inverse to the S&P 500. So when you're watching the stock market, expect gold to behave opposite, but also watch the T-bonds, because they could become, for a while anyway, let's call it for several quarters, a popular alternative to the stock market. And I think it's a place to look for a while. I'm not talking a long-term bull condition for the T-bonds, but something that would be jolting and likely to be.
As we further untangle Micheal Oliver's insights on the burgeoning momentum behind silver, it becomes increasingly clear that the anticipation for a silver surge is not merely based on speculation, but on a confluence of robust, foundational shifts within the markets and broader economic landscape. Oliver's perspective illuminates how silver, often overshadowed by gold, is poised to assert its prominence, propelled by an intricate web of factors that go beyond the usual market dynamics. One pivotal aspect that Oliver emphasizes is the evolving role of technology in shaping demand for silver. Unlike gold, silver has a significant footprint in the industrial sector, particularly in areas critical to the new economy, such as solar panels, electronics, and medical applications. This dual appeal of silver, both as an investment and industrial commodity, positions it uniquely at the intersection of traditional value preservation and cutting-edge technological advancement. As global initiatives towards renewable energy and technological innovation gather pace, the industrial demand for silver is expected to rise, further tightening the supply-demand dynamics and potentially driving up its price. Moreover, Oliver sheds light on the psychological dimension of investing, particularly how the narrative around precious metals is changing. With silver's impending breakout, as indicated by his momentum analysis, there's a growing realization among investors about the untapped potential of silver. This shift in perception is critical. As more investors begin to see silver not just as gold's lesser counterpart, but as a valuable asset in its own right, we can expect a significant influx of investment into silver, further fueling its ascent. Additionally, Oliver's analysis hints at the importance of macroeconomic indicators and their impact on precious metals. With inflationary pressures mounting and real interest rates remaining negative or low in many parts of the world, the allure of precious metals, especially silver, is magnified. In such an environment, silver's appeal extends beyond mere speculation to serve as a pragmatic hedge against the erosion of fiat currency value. This is particularly relevant in an era where expansive monetary policies have become the norm, underscoring the need for assets that can preserve value over time. What sets Oliver's perspective apart is his ability to connect the dots between disparate elements, be it the technical momentum, the economic backdrop, the shift in investor sentiment, or the industrial demand for silver. This comprehensive view not only highlights the potential for significant returns from silver investments, but also underscores the broader economic and technological trends that could shape the future of finance and investment.
Market via various timescales of measurement, things that will generate near-term movements, intermediate trends, and long-term trends. As it happens right now, called these like dominoes that are lined up. When the shorter-term stuff topples, it's likely to topple into the medium-term stuff, into the longer-term stuff. And there's a tight cluster of numbers. It won't take much to get a small crescendo on the downside to turn into something larger. I'll toss out a number for you. Right now, the S&P is trading around 5,250. You don't want to see 5,200 next month. You close the day around that 5,200 mark. I'm going to start breaking stuff. And that's true with most of the indexes and subsectors within the market as well. They can't sneeze. If they do, they're going to start to topple. And that's a monthly momentum timescale. In other words, let me put it this way. If you look at a price chart of the S&P, each month rises for the last 5 or 6, okay? Not explosively, actually. Like this month's only up a couple of percent. but it's a continual rise. But when you look at monthly momentum, you have a flat floor, perfectly flat. You could take a crayon and draw through the December, January, February, March lows on the oscillator. So you have a distinctly different technical vista when you look at momentum than when you look at price. And that floor that I just described on monthly momentum of the S&P and most indexes is literally a sneeze below you. And once you break it, you open a void of about, at least 5 or 10% where you could drop that much. The problem is you'll topple other dominoes if you do that. So anyway, I think the market's in a predicament right here. And I think gold knows that. And it's not waiting for the event.
As we delve deeper into the evolving narrative
that's
of
what
silver,
I think's going on there.
propelled by Micheal Oliver's
the stock market
insightful
is important
analysis,
to gold,
a more nuanced
as it will be
understanding of the
important.
market dynamics, and the broader economic context that could catalyze silver's ascent emerges. Oliver, with his keen eye on momentum structural analysis, signals that we're at a tipping point, where various factors converge to potentially elevate silver from its undervalued status to a leading investment choice. A critical piece of the puzzle that Oliver brings into focus is the role of investor diversification strategies in today's volatile market environment. As traditional assets become increasingly correlated, leading to a search for alternative investments that can provide genuine diversification, silver stands out. Its unique position as both an industrial commodity and a precious metal allows it to serve as a hedge against inflation and economic uncertainty, while also offering exposure to growth sectors like green technologies and electronics. This dual appeal makes silver an attractive option for investors looking to diversify their portfolios away from conventional assets, potentially leading to increased demand and higher prices. Oliver also discusses the significance of the monetary policies of major central banks, including the Federal Reserve, in shaping the investment landscape for silver. With the ongoing commitment to low interest rates and quantitative easing, there's an inherent devaluation risk for fiat currencies, making tangible assets like silver more appealing. Oliver's analysis suggests that as these monetary policies continue to unfold, the intrinsic value of silver as a store of wealth will become increasingly apparent to investors, further driving its demand. Moreover, Oliver points to the global economic recovery from the pandemic as a catalyst for silver's demand, both industrially and as an investment. As economies rebound, the industrial demand for silver, particularly in sectors such as solar energy, electronics, and medical technologies, is expected to surge. This increase in industrial demand, coupled with growing investment demand driven by silver's monetary attributes and potential for substantial returns, sets the stage for a significant re-rating of silver's market value. Oliver's narrative underscores the importance of understanding the broader economic and financial trends that influence the precious metals market. For investors, the key takeaway is the need to stay informed and agile, recognizing that silver's potential goes beyond its current market valuation. The convergence of technical momentum, macroeconomic policies, diversification strategies, and industrial demand presents a compelling case for silver as not just an asset worth considering, but one that could play a pivotal role in the next phase of the global economic and investment landscape. In this context, Oliver's insights serve as a guide for investors navigating the complexities of the market, highlighting the opportunities that lie in recognizing and acting on the underlying trends that shape asset values. For those looking to capitalize on the potential of silver, the message is clear. The time to pay attention is now, as the convergence of these factors could herald the beginning of a significant upward trajectory for silver, making it a key asset for wealth preservation and growth in the coming years.
The mistake that most technicians are making right now in regard to gold and the miners and silver as well is they're taking the metrics of the last several years and treating it as the norm. And therefore, what the action is this week or this month, they compare it to what was the technical action like over the last 3 years. And gold is created now. Remember, in 2020, the year 2020, in the summer, the price got up to 2,070, I think it was, intraday high, then dropped. Got back up to 2,070 again in March of 2022. Okay, so same price level, dropped. And that dropped all the way down to 1,613. So you actually had a 20% drop in gold at that point. By the way, that's not that big of a deal, but everybody thought it was a big deal. We thought it was a bear trap. You turned around in 2023, boom, made a new high, marginally above those 2,070 peaks. Got up to late last year, you got up to 2,150. Remember, intranight, actually it was an intranight trade where you hit 2,100 and boom, you shot to 2,150 in a matter of minutes. And then immediately, because there was a void of orders below, it dropped back down and got back to the high 1900s. So what they're seeing is this constant process of new highs in gold don't hold. That's the pattern that's burned into their mind, is because that's what's been going on for the last few years, and they think that's the norm. We argue that this recent surge up to 2,200, and we're now above that credibly, is different. This is not a teaser. This is highly unlikely to drop $150 back down. This time it's likely to engage, and we have momentum technical reasons to argue that this time, this particular upside probe will get traction and continue. And I think that's the mistake most technicians are making. They don't look at the bigger picture, that they've got this focus on this last 3 or so years. And that's been a highly abnormal period.
Of Micheal Oliver's analysis on silver,
so it's an abnormal template
the intricate web
to
of
employ.
Factors supporting silver's potential ascent is nearly fully unraveled. Oliver, through his expertise in momentum structural analysis, has consistently highlighted not just the when but the why behind silver's anticipated breakout. At this juncture, the conversation pivots towards a critical examination of the investor community's readiness to embrace silver's moment and the strategic moves that could maximize returns. Oliver emphasizes the growing interest in silver from various investor segments, including those traditionally focused on more conventional assets. This shift is partly attributed to a broader understanding of silver's intrinsic value, driven by its industrial applications and its historical role as a monetary asset. As awareness grows, the momentum behind silver is not just about market speculation, but about a revaluation of its role in a well-rounded investment portfolio. This includes its capacity to act as a hedge against inflation, its potential for substantial returns amid global economic shifts, and its utility in the burgeoning sectors of green technology and electronics. An essential aspect of Oliver's analysis is the timing of entry and exit points. For investors looking to capitalize on silver's potential, understanding the nuances of momentum analysis can offer invaluable insights into the optimal moments to enter or increase positions in silver. Oliver suggests that the signals for these strategic moves are deeply embedded in the market's structural momentum, which, when properly interpreted, can lead to significant advantages in timing investment decisions. Furthermore, Oliver brings attention to the potential ripple effects of silver's rise on related sectors, particularly the mining industry. As silver prices increase, the profitability and valuation of silver mining companies are likely to see substantial gains. For investors, this presents an additional avenue for leveraging silver's momentum by investing in companies with significant exposure to silver mining and production. This strategy not only capitalizes on the direct increase in silver prices, but also on the operational leverage that mining companies can achieve in a rising silver market. We are reminded of the importance of a holistic approach to investing in silver. Oliver's insights suggest that the opportunity extends beyond simply buying physical silver or silver-backed financial instruments. It encompasses a broader strategy that includes understanding the market's momentum, recognizing the impact of global economic and industrial trends on silver demand, and identifying leverage points within related sectors, such as mining, that can amplify returns. For investors attuned to Oliver's analysis, the path forward involves a blend of technical insight, strategic positioning, and a forward-looking perspective on global trends. This approach not only positions investors to benefit from silver's potential ascent, but also aligns their portfolios with the underlying shifts in the global economy and the evolving narrative of precious metals in the 21st century. As we edge closer to the threshold of a new era for silver, the call to action is clear. Now is the time to prepare, to be informed, and to act decisively. In the final chapter of our exploration into Micheal Oliver's analysis on silver, we arrive at a pivotal moment where all signs point towards a paradigm shift in the perception and valuation of silver in the global market. Oliver, with his adept momentum structural analysis, has painted a comprehensive picture of the undercurrents that are likely to propel silver into a new era of recognition and value. This closing segment focuses on solidifying the investor's understanding of why and how to position themselves to not only witness but actively participate in silver's ascent. The culmination of Oliver's insights brings us to a crucial realization. The rise of silver is not an isolated phenomenon, but a reflection of a broader recalibration in the financial markets. This recalibration is influenced by a confluence of factors, including geopolitical tensions, shifts towards sustainable energy, technological advancements, and the global economic landscape's evolution post-pandemic. For investors, this signifies an opportunity to align with the macroeconomic and societal trends that will shape the future. Oliver emphasizes the strategic importance of staying informed and agile in the face of these changes. For those looking to invest in silver, it's essential to adopt a multifaceted approach that goes beyond traditional buy and hold strategies. This approach involves continuous learning, monitoring market momentum, and adapting investment strategies to align with the evolving market dynamics. Oliver's analysis offers a roadmap for navigating these complexities, highlighting the need for investors to be proactive and responsive to the signals and trends that will define silver's market trajectory. Moreover, Oliver's narrative underscores the importance of diversification within the precious metals sector itself. While silver stands out for its potential for significant gains, investors should also consider how it fits into a broader portfolio of precious metals and related assets, including gold and mining stocks. This diversified approach can help mitigate risks while maximizing the potential for returns in a volatile market environment. As we close this exploration of Oliver's insights, the message to investors is clear. The time to reevaluate silver's role in your investment portfolio is now. The impending shift in silver's valuation is not merely speculative, but grounded in tangible economic, technological, and geopolitical factors. For those prepared to act on these insights, the coming years could offer unprecedented opportunities to benefit from silver's rise. As silver embarks on this exciting journey, the potential for wealth creation and preservation is immense, but it requires a willingness to embrace change, understand the market's momentum, and make informed decisions that capitalize on the opportunities ahead. For those ready to take this step, Micheal Oliver's analysis provides a foundational understanding and strategic guidance to navigate the future confidently. Silver's ascent invites a reimagining of its role in the global economy and investment portfolios, promising a future where its value is fully recognized and harnessed.